Hello traders, Rich here, and here's a quick but detailed update on GBPCHF. As usual, if you like video analysis, let me know in the comments or simply leave a like. So let's get started. As we clearly see, GBPCHF has been stuck inside this range between our blue support and green resistance, and we lately rejected our support zone, traded higher. We even broke above the previous high. So we'll be looking for trend following buy setups inside this range, expecting a movement to the upper bound of the range, of course, unless we break the range downward and the support. In this case, it would become a resistance and we'll be looking for some setups on the retest. For now, we are stuck inside the range in the shape of a symmetrical triangle, so let's zoom into lower time frames and look for buy setups. As mentioned previously, just like for example here, the bears took over and traded lower. Here the bulls took over after rejecting the support and forming an inverse head and shoulders. We are currently retesting this previous support. We'll be looking for a trend following buy, of course, knowing that price can still trade a little bit lower, test this demand before trading higher. If you zoom into M30 time frame, we can see that we are forming a wedge pattern as we can see in orange. So for the boost to take over as a trend following setup, I'll be waiting for a break, a momentum candle close above this last major high from M30. In this case, I'll be going for a long stop loss below the previous major low, and we target a 1 to 2 risk to reward ratio to have an edge over the market from a risk management perspective, which would be resulting in a higher high. Of course, meanwhile, until the buy is activated, GPCHF can still go a little bit lower, test this demand zone. In this case, we'll be looking for buy setups around this lower bound.
Before we continue, I want to tell you about Tickmill. Tickmill is established in 2014 and is one of the leading Forex and CFD brokers with registered users from more than 200 different countries. Tickmill is a no-dealing desk and ECN broker regulated in many countries like the UK, Cyprus, and recently in South Africa. With Tickmill, you can trade a wide range of instruments, starting from Forex to indices, commodities, and even crypto. Most importantly, with very low spreads and trading fees. If you don't have an account yet, make sure to create one using my referral link in the description below to benefit from 5% discounts on your trading fees. And let's continue.
As we clearly see, AUDUSD has been overall bearish, making low lows and lower highs, trading below this blue trend line, and we are currently approaching this trend line, acting as a non-horizontal resistance. Moreover, we've got a horizontal resistance, previously resistance here, turned support, and currently acting as a resistance zone. That's why this zone is a very strong area to look for setups as a trend following sell. Of course, knowing that AUDUSD can still live inside the zone, just like previously multiple times before trading lower. That's why we don't sell blindly. We zoom into lower time frames and look for extra confirmation that the bears are taking over. If we zoom into H1 time frame, we can see that lately we have been bullish approaching this resistance zone, and we are waiting for the bears to take over. As mentioned from weekly time frame, for the bears to take over, we need to see a break below the previous major low. In this case, when the sell is activated, the stop loss would be above the previous swing high, and we target a 1 to 2 risk to reward ratio, which would be around this demand zone, and support also from daily time frame. Meanwhile, until this happens, AUDUSD can still trade higher because, as you already know, we are still bullish, making higher lows and higher highs. So we can still trade higher and higher, dive inside the resistance as mentioned from weekly before we finally break a previous major low. For now, I'm waiting for this. Meanwhile, of course, we are bullish. Best of luck, and I'll see you hopefully on the next one.